Let's jump right into a fascinating puzzle playing out in the Indian economy.
So get this. India's private sector announced a whopping 13.3 lakh crore in new investments in the first half of the fiscal year. But only 1.5 lakh crore worth of those projects actually got completed. And during that same time, the government went ahead and executed projects worth 2.6 lakh crore.
So what is going on? There's this massive gap between what's being promised and what's actually being built. To figure it out, we've got to follow the data.
Okay, first things first, let's really break down this gap. We're talking about Capex, capital expenditure. You know, the money companies are spending on big physical things like factories and new equipment. It's a huge sign of how healthy the economy really is.
Now, if you just look at the announcements, the headlines, well, the private sector is just crushing it. They're making up 88% of all the promised investments. On paper, it looks like this massive wave of confidence is about to hit.
But then you switch from the promises to what's actually getting done, the completed projects. And the whole story just flips on its head. Suddenly, the public sector is doing most of the work, responsible for 63%. That's nearly 2/3 of all completed projects.
And this chart just hammers home the real money difference. We're talking absolute values here. Government projects that are finished and running are worth 2.6 lakh crore, easily outpacing the private sector's 1.5 lakh crore. The government is, for sure, still doing the heavy lifting.
But, project completions are kind of like looking in the rearview mirror. If we want to see where we're going, we need to look at the forward-looking data. And honestly, that tells a much more optimistic story. Just take a look at capital goods order books. This is a key sign of future investment. In fiscal year 25, they shot up by an incredible 20.5%.
And to put that number into perspective, the average growth for the 5 years before that was just 4.8%. This isn't just a little bump, it's a massive acceleration. It suggests companies are seriously gearing up to turn those announcements into actual spending, and soon.
And right here is the crucial point. Even if the big factory openings are still a ways off, the broader corporate spending is already on the rise. An 11% jump across almost 2,000 companies, that shows the foundation for all those future projects is being laid right now.
So, where is all this spending and growth actually coming from? Well, it's not happening everywhere at once. It turns out, one specific sector is really acting as the main engine here.
And that sector is power. Capital spending here just exploded, jumping by a massive 72.6%. It's pretty much single-handedly leading this revival.
A huge piece of that puzzle is renewables. You can see a super clear path here. We're on track to nearly double our capacity in just 3 years, going from 28 gigawatts to a projected 53.
And this isn't just random investment. It's being fueled by real, deep shifts in the economy. Think about the massive energy needs of data centers, the rise of electric vehicles, and the simple fact that more factories and more air conditioners need a whole lot more power.
But, and this is a big but, this recovery isn't uniform. To really get the full picture, we have to look at where this is all happening and, just as important, how it's all being paid for. At the state level, the performance is just wildly different. I mean, you have states like Telangana and Gujarat that are absolutely surging ahead. But at the same time, some other big states like Uttar Pradesh and West Bengal have actually seen their capital spending shrink. And the way this revival is being financed is also changing. Traditionally, you'd expect to see banks lending a ton of money to big industries, but that's only grown by a tiny 2.4%. Instead, foreign capital is just flooding in, with net FDI more than doubling to $10 billion.
Okay, so let's pull all these different threads together. What's the bottom line? What does this all mean for anyone watching the Indian economy?
Oh, here's the answer to that big question we started with. First, the private Capex revival is definitely real, but it's still in its early days. Second, the growth is really focused on specific areas, like the power sector. It's not a broad-based boom just yet. Third, the future looks a lot brighter than the present, with all those forward-looking indicators pointing up. And finally, the money is coming from different places now, less from traditional banks and more from foreign investment.
So the revival is here, no doubt, but it's a very selective, very specific kind of revival. And that leaves us with the critical question we all need to watch next. Will this targeted growth in a few key areas be enough to spark a true nationwide investment supercycle? Now that is the story to follow.